Welcome back to Charting Essentials with me, Sean Mearson. It's a show where we look at everything technical analysis. Today we're going to look at something similar but not so different to what we looked at in our previous episode. So if you watched that Head and Shoulders episode recently, that pattern very simply warned us that an uptrend is turning into a new downtrend. Today we're looking at the inverse Head and Shoulders, and what does that tell us? Well, surprise, surprise, the opposite. So we're just going to play the last video backwards, and then you're fine. What's the difference? Inverse Head and Shoulders very, very simply looks like this. We've got our left shoulder, we've got our head, and we've got our right shoulder. That's what the pattern looks like. We can link the highs of that pattern and refer to that as our neckline. So that is the point where we're going to say that this is a warning that the trend is changing direction. The trend is reversing, and that is our inverse Head and Shoulders. Now, when you look at that inverse Head and Shoulders, you look from the head to the right shoulder, we can see that we are now making higher lows. When we see the price moving through the neckline, we now have higher highs in conjunction with those higher lows. So those are the building blocks of an uptrend, and they come after the market has been in a downtrend. Left shoulder, head, right shoulder, neckline. Except you turn that upside down, because then it's an inverse Head and Shoulders. So how can you use the pattern? If you're in a short position, you see this pattern, it might be an indication, well, maybe it's time to get out of my short. If you're looking for new positions, you see the price breaking the neckline of that inverse Head and Shoulders pattern, that could be an indication to go long in the market. So if you're looking for targets from this pattern, you can do that. We'll use that theory of proportion again. We measure the height from the head to that neckline. We take that distance and we project it from the breakout area. The breakout area is that point where we see the price moving through that neckline. We look at that as our potential target. Story time. I go along on about this price highs and price lows and market logic. Why do we look at that in technical analysis? There's a very, very cool analogy in the book, Technical Analysis of Stock Market Trends by Edwards and McGee. There's a whole lot of editions of that, but they tell a very, very cool story about if you're standing at the shore of the beach and you're trying to understand where the tide is coming in or the tide is going out, how would you do that? Well, very simply, you stand at the shoreline and the water washes onto the sand. You see how far it washes up. You mark that point with a stick. The water will go back into the ocean, and then the waves will wash onto the shore again. And if the wave now runs past that stick, you can take that stick and you move a little bit back. As that happens, you know that, well, the tide is starting to come in now. At some point, the water will fall short of that stick. And we'll take that stick and we'll move it forward again. Now we know that the tide is going out. So when you look at technical analysis and we're looking at price highs and price lows, it's really the same thing where we're looking at the market, those tides that are coming in and coming out. Except it's not a tide, it's a share price. And if you look at something like a Head and Shoulders or an inverse Head and Shoulders, it's showing you the difference of when the tide was coming in and that turning point where the tide is now starting to go out. So in technical analysis, we're looking at the same type of system when we're looking at the price action. The price is making higher highs. We know the tide is going out. The price is making lower highs. The tide is coming in. All right, I hope that's been helpful. Good luck out there trading. Bye.